Welcome to the India Fintech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India. Hello and welcome back to India Fintech Diaries, your go to podcast for all things fintech. I'm your host, Elroy, and today we bring you a special end of the year recap episode where we reflect on the trends that shaped the Indian fintech space in 2024 and what lies ahead for 2025.
That's right, Elroy. We have had a whirlwind of a year in fintech, and then the second half of the year has been very choppy when it comes to public markets as well. There has been very interesting funding trends, new technologies emerging every month, every day, exciting disruptions across various sectors. And it's very difficult to, one, keep tab of it, and two, even understand it. So, to help us make sense of it all, we have a very, very special guest with us today, isn't it, Elroy?
Yes, Simon. Joining us today is Neha Singh, the co founder of Tracxn, one of the leading data intelligence platforms for private market research. Tracxn tracks over 3.3 million entities across industries globally and is a critical resource for private equity and venture capital firms when it comes to making informed investment decisions. Neha, it's an absolute pleasure to have you with us today.
Excited to be here. Thanks a lot for having me.
Before we dive into the fintech trends of 2024, could you tell our listeners a bit about your background and how Tracxn came to be one of the leading private market research firms globally?
Sure. So I am, born and brought up in Bombay, and did my undergrad from IIT Bombay, computer science. I initially worked in a management consulting company, the Boston Consulting Group, and then Sequoia Capital. And when I was working in Sequoia Capital, that was the first time when I probably saw the private market very close. And this was actually a decade back, right?
Right.
So we were investing primarily, in India and a little bit in Southeast Asia. And even then the pace was getting started, and there was a lot of interesting deals happen, and now this is like a decade back, and obviously the ecosystem has evolved so much after that.
Yeah.
And after that I actually went to Bay Area for Stanford, and interestingly that is where Traction also got started. So a lot of people actually think that it initially launched in India, but actually we launched initially in US. The idea was simple, that if you look at the public market investors, they have a luxury of a lot of platforms like a Bloomberg, Refinitiv, Capital IQ, FactSet, etc., that
Correct.
exists. But as private market investors, we were literally sort of building the whole information stack ourselves. And we thought, as this asset class is becoming large and important globally, there has to be a platform that exists. Similar platforms, that existed for the public market investors, you'll also have it for the private market investors. And can we build a global platform in this space? So that's how we started, and we really wish that a platform like this existed when we were investors. And 2 years back, we also had the fortune of getting listed on the NSE in NBSE, and so it has been a decade-long journey.
Yeah, I have been a user of Traction as someone who has been close to the fintech sector specifically. And even if before that, I spent some time at an organization where I used to do some buy side due diligences. So I have seen the report that end of the year you do, or in fact, quarterly you do on the sector. And there are some very interesting data points that you have there. So if you could just take some time and share with us the key trends that you see in the fintech funding perspective and the connected data points, that would be very, very interesting for our listeners.
So if you look at it this year, which is 2024, India fintech in specific saw investment of little less than $2 billion.
Right.
Overall, it's slightly, it's about $11 billion overall. Out of them, fintechs was about $2 billion. So I think two things interesting in that. One is India as an ecosystem for fintech has become fairly sizable, right? If you compare to some of the other geographies. So for instance, if you look
Right.
at just 2024 standalone, India was the third largest geography in terms of the funding in fintech, right? Followed by US and UK, essentially. So India followed that. So it has become fairly large geography in terms of the fintech overall funding, as well as also in terms of in this space, right? And if you look at the overall funding, which has been all time, it ranks fourth largest after US, China, UK, and these three countries. They have India. right? So that is one interesting aspect in terms of just the kind of companies that it has been able to emerge in this ecosystem, right? Also in the fintech space. And the second part is that if you compare this to the previous year, obviously there is a decline which is there. So
Right.
if you compare it to the previous year, there's little about 30% decline which has happened in this funding, and probably 70% decline from the peak of 2021. That is sort of in line with what you're also seeing in some of the other sectors, which is I would say more broader. As you have like lesser late stage rounds, especially, that's probably also having happening that you saw a little bit of decline that is there, right? But having said that, most people think that probably the this year or the last year, probably the bottom is behind us, and there's increasing momentum that is there in terms of the funding rounds which is happening.
If we have to double click on the overall number, you said it's about $2 billion of investment this year, which is a 30% decline year on year compared to the last year. You touched upon a fact that maybe there has been a lower amount of later stage. So, what is the early stage versus later stage situation this year?
So if you see across the different stages, seed early and late, there is,
Right.
decline which is there as compared to 2023, which is there. But the decline is more in the later stage than on the earlier stage. So if I were to just break down into seed early and late, the seed stage saw a drop of about 20%. Early stage, which is primarily series A, B, is about 16%, and about 40% decline in the later stage, right? Which is, your C onwards. And so one is it's also a little bit globally, like even if you look at globally, there was about 23% decline in the late stage that happened
Right.
in the global fintech funding as well. And that is a similar thing that you see in the India space as well. I think one of the reasons why you would see that, even if you like speak to the investors this year, in the early stage the momentum has come back post the decline which had happened in 2023, which is in terms of the momentum or in terms of the number of deals that are there. So that is back. But in the late stage, you still see some of the large funds which led a lot of rounds earlier. They still they are yet to sort of do active investments. A good example being large funds like a SoftBank or a Tiger Global, right? In
Right.
2021, for instance, they had led so many of the large rounds which had happened. But if you see this year, they're yet to sort of do any investments as yet. So I guess that is probably awaited, and that's why you see some decline, some impact more on the later stage than on the earlier stage in terms of the stage and how that has varied.
And if we also go further inside this and then look at this funding from a sector perspective, uh, how do you see that changing? Is it still, say, lending is heavy, or you see changes like wealth tech is coming up? So what's the trend like this year?
Yeah, so I think that is something interesting. So yes, lending continues to be the top funded sector within fintech.
Okay.
And obviously there's obviously different flavor, there's lending across different I would say verticals, which is probably evolving. So lending continues to be one sector which saw the most amount of funding within fintech, right? Example being companies like a Mintifi, which are focusing on different sort of lending to businesses or to consumers, or to supply chain, etc., right? That is one space. The other thing is investment tech, as you rightly mentioned, that was probably the second most funded subsector within that. So like if lending got a funding of about $1.2 billion among the total funding which fintech sector saw, investment tech was about 300 million, right? And you saw large companies raise rounds like a Perfios or a Deserve, right? Which is into the investment tech sort of space, right? Or a wealth
Yeah.
advisory, etc., right? The third is your payments as a sector. So payments again is sort of a more evergreen sector. Some companies take a stab at that and from different angles. So payments saw funding of about 200 million, right? And then you have some emerging sectors as well, like you have real estate financing, which is primarily home loans, right? Which has been a very traditional sector, and then you also saw some companies sort of taking a stab at that. The second interesting I would say upcoming one is insurance. So again, people talk about the fact that how insurance is very underpenetrated in India, and how there is a lot of scope for increasing penetration of insurance. So you saw different subsectors within that. So employer insurance, for instance, was one sector that saw funding of about little less than $50 million. and you had companies like Onsurity, etc., raise funding in this space. And then you also had internet first health insurance, which also saw some rounds. So I would say, in addition to the traditional sectors, these would be some of the ones which are there.
And Neha, basis the numbers they have shared, it looks like about this year, 60% of the funding of the $2 billion has gone into lending. Considering that lending kind of is going through a slightly difficult phase this year, did you see a variation from saying earlier there was more equity and the deal structure has now is moving, or there is a good component of debt coming into picture, or it continues to be very equity based funding?
So yes, there has been. I think in terms of lending, you also saw some tightening of regulations. I would
Right.
say that has
Right.
happened in this, and that is why it probably impacted some of the companies, especially sort of peer-to-peer lending or consumer lending, etc. That you saw some regulations which sort of impacted. But I would say there are other avenues which saw more funding than your traditional ones, which probably had seen funding in 2021. I think there's continues to be sort of more avenues within that, though there is tightening and that you saw some impact and you saw some companies also getting impacted because of this regulation. You saw sort of more like companies take a different stab at that, and lending, like in supply chain, for instance, that was one example that company were able to sort of raise large rounds. My sense is that it was probably a mix of equity and debt, but I think it did see a large equity rounds, which is sort of interesting.
We have looked at some serious numbers, Neha, but I would bring something of which is very anecdotal or observation based. Tell me, because I have seen you track in addition to numbers, also saying who are the founders, their credentials, age, etc. So this time, as I have moved between Global Fintech Festival, Singapore Festival, it seems that I have started seeing more gray hairs compared to black ones, like I used to see in the early parts of when the fintech was coming up in the country. So, do you also see in your analysis that, considering that now all regulators are highly focused on ensuring the clients and customers are safe, the regulation becomes very, very important, and hence the number of founders and CxOs in the fintech seems to be more on the grayer side than having black hair?
No, that's a very interesting, point that you actually bring up. So I think one thing which has definitely changed in this fintech space is that earlier, if you see probably like a few years back, you had the financial services, which is your traditional companies,
Right.
right? And
Right.
they would work very closely with the regulators, to make sure that everything is sort of managed, etc. And then you have the fintechs who typically would not touch upon the regulations, or they would not typically run into some of these, and they would probably have a sort of a free run in that sense. I think what you are seeing more recently is that right now, because of the fact that some of these fintechs are becoming sizable, right, and are also taking a stab at a lot more sectors, you see a lot more interactions of these fintechs and the regulators today,
Right.
right? And I think one thing which has happened in a positive sense is that now you have the fintechs also be very open to regulators, right, and to be thinking about that upfront. So yes, that is a glad change that now you also have some of these fintechs who understand the regulations very well, or who are probably thinking about it from day one versus thinking about it like year 3, year 4, right? And I think that is probably opens up a lot of space for the fintech companies, because of the fact that once you work with closely with the regulator, you can take a stab at much more larger sectors, right? Larger problems or larger spaces, I would say, which is one thing which is very interesting. So in the payments, for instance, you saw also a lot more second time founders, for instance,
Right.
Yeah.
starting a company, right? Someone who has probably worked in a payments company and now launched a payments company with a different angle, right? So you saw a lot more of that happening in the recent years. And I think it's amazing that now you don't have the differentiation that you have the financial services, the traditional financial services which deals with the regulations, and the fintechs who do not understand that. I would say that demarcation is sort of blurred, and now you have fintechs also taking very serious things and working with the regulators. And on the other side, I think you also saw more proactiveness in terms of the regulators working with these companies, right? Like for instance, obviously seen a lot of times in news that RBI came up with these regulations, and it impacted so many companies, etc.
Right.
But
Right.
on the positive side, one of the things that you also hear from the companies is that now they have become, at least the regulators have become much more open in terms of listening to the issues that the fintech companies have. So, for instance, they also have like this forum wherein you can actually reach out to them, right? Otherwise, for a company, right, like for a 1 year or 2 year company to reach out to a regulator, that was a something which people would not think about, right? That is that's possible. It's primarily people have thought about this like a one-way communication, but it's interesting to see that at least they are also sort of having forums wherein people can voice their concerns, etc. So I think it's good that you have now a more gray hair, I would say, in the fintech space as well.
Yeah.
And you have a lot more, I would say, second time founders who are taking a stab at various issues from their understanding of that sector, which is already early, good, of having worked in companies in that space.
Yeah, shifting back the lens to the funding side of things for a bit, right? How are VCs and Ps now looking at investing in fintech? So if you look, turn back the clock to about a year and a half back, there's a lot of focus on B2C firms looking at chasing growth at all costs. Has this now shifted more towards profitability and focusing more on B2B firms, as an example?
So that has definitely changed, in terms of how investors are seeing the or evaluating the companies, and also I would say the narrative that investors are asking from the companies, and also the narrative that companies are now focusing on. So I think
Right,
both of them have changed in the last, I would say 2 years or so. So obviously, when the capital is very cheap, you are focusing on growth at all cost. And right now, because it is sort of limited, and the interest rates are higher than probably earlier. Obviously, there's a lot more talk about getting to profitability, or what is the timeline for profitability, and not growth at all cost, but sort of a reasonable growth. And I think the second thing which has also spurred a lot of these is that you saw like this year 2024 was a bumper year for IPOs, right?
right.
Especially IPOs in the fintech space also, right? Like this year was probably the highest in terms of the number of fintech, if you look at it across the last 2 3 years, right? So, and whenever a company hits the public market space, then the whole notion of being profitable, etc., that gets reinforced, right? And now, as investors are seeing even Indian public markets as a good exit avenues for some of the investors, the whole narrative around thinking about profitability earlier on, I know, as you're building the company, sort of that becomes important. So yes, that is a good change that you see in the last, I would say, about 2 years or so, in terms of especially in the late stage rounds. And you
Right.
see this change in narrative both from the investors perspective, that they are also using that, and or they are also conscious about it when they're evaluating companies, as well as companies also talk about it. So now you saw a lot more companies talk about the fact that I'll become profitable in this year, or I'm cash flow positive, etc. And I hope to sort of get listed in like 1 to 2 years timeline. So whole listing also probably help reinforce this whole narrative.
Correct. And Neha, for a fact, I know that your team also does specific calls on certain thematics with the investors a lot of times, right? Based on those conversations, do you have a view on the dry powder or fintech dry powder which is available with fintech investors in the market?
So I think there is, from all the conversations across the funds which are there, there is dry powder which is there.
Right.
I think what investors are more wary about recently is that they are more conscious about the valuations at which, for instance, they are coming in, right? And so I think you saw some of the delay in terms of the funding rounds also happening because of it, right? Like investors are looking to sort of invest, they have dry powder to invest in companies, but the companies who had raised rounds in the peak, right,
Right.
2021,
Yeah.
at a high valuation, obviously there has to be some correction which needs to happen in those valuation. So if you see on the public side, that correction happens very soon. So you saw a lot of companies, except if you remove the fang or the top few companies, right? The especially even in US, you saw some of the other companies had a good correction of 70 to 80%, in terms of the valuation at which they were sort of trading. These are tech companies, right? But a similar thing in private takes longer, right? So that similar correction in valuation can actually be delayed in terms of the private markets, and that is why you saw the delay in some of the rounds, especially in the late stage round, also happening because of that fact that investors want to invest, but they want to invest at a reasonable valuation, or valuation which is more closer to the public market sort of peers, right? So yes, I think this is one thing that you definitely saw a difference in terms of investors. So they do have a lot of dry powder, but they are sort of fairly conscious about coming in and the ticket size and the valuation.
Valuation. Got it. Got it. And a connected question, because we're now looking a bit forward based on our 24 experience as well and your conversations with the investors. From purely the subsector perspective under fintech, based on these conversations, are there inkling around what sectors, without naming the exact sequence, but what sector seems to be will be the flavor of 2025, considering, for example, things like for past 2 3 years, personal loans or unsecured loans were within lending as well were the top of the list. But considering the NPAs are already increasing on unsecured loans, maybe they may not be the ones to go forward. So your conversation, what subsectors have come up as really interesting that investors are evaluating for the next year?
Right, right. So yes, that is correct in terms of, for instance, in lending, obviously people are a little wary about the sectors wherein you have historically high NPAs.
Right.
So, I think there are a lot other sectors that people are also looking more actively in. I think the other thing which has also come up is obviously people are also tracking the per capita GDP in India, right, and how that is
Right.
increasing. And that is why you also see a lot more these wealth tech companies coming up, taking advantage of that. Now, like, India has become a sizable in terms of the wealth that sort of exists. A good example of that, I would say, in an unrelated sector, in an unrelated space, is, for instance, even if you look at the VC funds, right? Earlier, a lot of their LPs or limited partners who invest in these funds used to be from outside India, right? Nearly, bulk of them would be outside India. Right now, that has changed to some extent. So, because of the fact that some of the family offices in India have also become large, if you see some of the funds which got raised in the last 2 years, I would say a lot of the limited partners, are actually from India, right? So that is
Yeah.
just a proxy to the fact that there is wealth that is getting created, in India as well, domestically, which is also in the large parts, and as well as that's why you also see some of these investec companies post huge numbers, right? Like Zerodha or some companies post huge numbers in terms of the revenue or the total accounts, for instance, they've had. Right, so that continues to be sort of one space which used to be, like negligible maybe like a decade back, and now companies in that space have become sort of sizable. So that is, probably one thing. Payments, again, though you would see that, you would think that it's a small space, and
Yeah.
payments has been like an evergreen space for the last, I would say, like 15 years. But still, that has scope for new companies to come in, right? Like, for instance, your cross border is sort of not solved, or there's so many other parts in the payment space that companies are still taking a stab at. That, though you would probably write it off saying that, okay, it's an old sector, maybe the large players have done it all, but there's still scope for newer players to sort of continue to come and then innovate in these sectors. And just moving on to some of the other themes, that you also saw some of the old traditional boring things come back, right? Like fixed
Yeah.
deposits, right? Which which
Which was a
you would
surprise
think
to
that,
everyone.
yes, right, you'd think that it'll be like only the banks taking a stab at that, and who else in the fintech space would do that. But you saw like a couple of companies coming in that space and offer FDs, right, which is traditionally very understood by people. So I think that was an interesting thing as well, that you also some of the fintechs take a stab at the very traditional things which have appealed to the to people at mass. But now you also have them doing that with a different stab.
And yeah, as fintech continues to mature, do you expect more consolidation to mergers and acquisitions in 2025? Or do you think the market will continue expanding with new entrants?
So that's an interesting question. Our sense is that I think it'll continue to expand in terms of new companies coming in. Consolidation, I think it might happen to some extent, but like for every aspect, I think there's nuances across every of the small aspects, right? And
Right.
it'll be difficult for a company to sort of be able to deal with the regulations across multiple sectors, right? So our sense is that. Maybe there will be some acquisitions that may happen, but on a broader space, you will continue to see the newer companies actually emerge and become large. And the second thing, which has also probably helped this whole space, right? I think the whole India stack, people talk about the India stack, and one of the key things about India stack is how do you make the movement of money very easy,
Yeah.
right? The financial inclusion, which started from that, but just movement of money very easy. And that is also one of the reasons why you see that if today I'm launching a fintech company, I already am able to accept payments by over a billion people, which probably
Right.
would have taken me much longer, traditionally, right? So I think that has also helped sort of newcomers in the fintech space. I would say that just the moment of money, right? Like because of the fact that it's helped by the rails which has been put about, the newer companies also have a disproportionate advantage of not having to rely on some of the larger the distribution which some of the larger ones have built over the years. The newer companies are able to sort of tap into some of them very early on, right? Like you saw this when UPI got launched, the whole value of wallets which sort of existed, and that is why you had two-sided marketplace wherein you have both your people on the same wallet, right? That got disrupted
Yeah.
when you had UPI, right? So and now if you want to launch anything, right? If you want to launch like a payments in a retail space, even if you want to take money from people in the tier 2, tier 3, tier 4 cities, you are able to do that because nearly everyone has a bank account, nearly everyone is on UPI. So I think that has also helped in terms of I would say the Indian fintech ecosystem to also be very conducive for newer players to come in and be able to tap into a large market.
Two forward-looking questions, Neha. One, I know within fintech as well, you have tags, then sub-tags, and then there are sub-sub-tags as well as new business models or new areas keep evolving. So one question is, we know the big ones, right? Lending, investment tech, payment tech, etc., etc. But within this year, are there like one or two or three absolute new areas that have come up in your observation, which you found very interesting? So that's question number one. The question number two is, from your perspective, what are the innovations, could be technology or business model, that you think the Indian fintech startup should be are actually focusing on or should be careful about as they move into 2025?
So I think in terms of the sectors that you saw, in addition to the some of the traditional ones that we sort of discussed about,
Right.
I think probably a couple of sectors. One was regulation tech. What that
Okay.
means is
Yeah.
that basically how would you help companies, or enterprises primarily deal with regulations, right? A lot of software or enabling layer around that. So that was one interesting thing that actually is a large theme also globally. Like globally, obviously that's a fairly large thing, and you also saw some action in that over here. Second, I would say probably embedded finance. Again, it's not very new, but because of the fact that right now a lot more people, a lot more companies want to have some part of the fintech stack. Maybe it's lending, maybe it's some bit of it. Then how do you basically enable some of the more traditional players to also launch that sooner, right? So you saw some companies coming up in that. So I think probably these were some of the few themes in addition to the traditional ones like payments, lending, neo banking, insurance. Insurance at different levels, either it's employer insurance or it's health insurance, etc. I would say these are some of the sectors wherein you saw some action. So I think one thing which that I'm really excited about, the fact that just the fact that fintechs have from day one they're thinking about working closely with the regulators. I think that is something which I feel is great. So because even if you think about very regulated spaces, right? Like you now have companies which are taking a stab at. I think that is one thing which overall as a theme sort of I'm excited about, because then like even if you look at the whole listed space, right? Like even if you look at the large overall offline space, financial industry is like sort of one of the largest pillars. Like even if you see the listed space, you would have the financial companies be a very large part of it. And one of the reasons why they've done a good job is that they're able to work in a very regulated manner and that yet be able to work very efficiently. So I think once that skill you see the fintechs taking a stab at that from day one, I think that really opens up a lot more avenues for companies to sort of innovate as they are sort of touching a lot more spaces, I would say.
Neha, it's been a pleasure hearing insights today. Thank you for sharing such valuable data and your perspectives on the future of fintech.
Thanks a lot for having me.
Yeah, I think we have covered a lot of ground today, and I'm very sure the listeners would have enjoyed and appreciated the depth of understanding you have brought to the table on fintech. And in addition to that, as a pure customer, and yeah, sorry if you have already included that into your product, but data point that I would love to see when I look at fintech is, see, fintech is slightly different from other industries, right? So when you look at a balance sheet or you look at the ROA tree, it is read slightly differently. I know your data already pulls revenues and etc., but I have this thing that over a period of time, if we're able to really build the ROAs, etc., view as well into when we look at fintechs, that would be really fantastic.
No, for sure. This is actually, thanks so much for that input. And this is actually something in pipeline. So you should see that soon. But a great, that's a very handy input. So thanks so much for that.
Thanks, Neha. We really look forward to this as well now and see how the fintech unfolds for India in 2025.
Awesome. Excited about that. Thanks a lot.
Before we go, we would like to wish all our listeners a Merry Christmas and a Happy New Year. We hope you have a fantastic holiday season and look forward to bringing you more exciting fintech content in 2025. Stay safe and keep exploring the world of fintech.